Hello, financial enthusiasts. Welcome to another enlightening journey into the world of finance. Today, we're going to take a deep dive into the significance of market indices. Now, you might be wondering, why are these indices so important? Well, let's think of them as mood rings for the economy. Yes, you heard that right. Just like a mood ring changes color to reflect our emotional state, market indices fluctuate to represent the overall sentiment of the market. Market indices are a collection of a segment of the stock market, calculated from the prices of selected stocks. They serve as reliable barometers of overall market sentiment and economic health. A rise in these indices usually indicates a positive investor sentiment, buoyant corporate earnings, and a healthy economic environment. On the contrary, a dip might suggest a decline in investor confidence, subdued corporate performance, or a challenging economic scenario. But it's not just about the ups and downs. Market indices provide a snapshot of the entire market, giving investors a sense of the market direction. They are a quick way to gauge whether the market is bullish, indicating a trend of increasing stock prices, or bearish, signaling a trend of falling stock prices. For instance, if the Dow Jones Industrial Average, a prominent market index in the United States, is on an upward trajectory, it's a sign that investor confidence in the market is high. On the contrary, if it's slipping, it might indicate that investors are becoming more risk-averse. So, as we have seen, market indices are the pulse of the economy, reflecting the ebbs and flows of investor sentiment. They are more than just numbers on a screen. They are powerful tools that provide valuable insights into the health of the economy and the direction of the market. So, the next time you come across these indices, remember, they're telling you a story about the mood of the market. Stay tuned as we continue to explore this fascinating world of finance. Now, you might be wondering how to keep track of these crucial indices. In the digital age, tracking market indices has become as simple as scrolling through your social media feed. So let's dive into the tools that make this possible. Financial websites are like your personal financial newsroom, constantly curating and updating the latest on market indices. Whether you're interested in the Dow Jones Industrial Average, the S&P 500, or the NASDAQ Composite, these websites serve up the numbers hot and fresh right off the Wall Street griddle. They offer a detailed breakdown of index values, constituent stocks, and sector performance, all neatly organized for your perusal. News platforms, on the other hand, are the storytellers of the financial world. They weave narratives around the dry numbers, giving you the context and analysis that makes sense of market trends. If the Dow Jones has taken a tumble, these platforms will tell you why, how, and what it could mean for your investments. But the real game changer in tracking market indices is the advent of trading apps. These pocket-sized powerhouses bring Wall Street right to your smartphone, offering real-time updates on market indices. Imagine having the pulse of the global economy at your fingertips, ready to be checked as casually as your latest text messages. These apps are designed with user-friendliness in mind. They feature interactive charts that let you zoom in on specific time periods, compare different indices, and even predict future trends using sophisticated algorithms. You can customize your dashboard, setting up alerts for your favorite indices or any significant market movements. It's like having a personal financial advisor, always on call. And the best part? Most of these tools are free or offer basic features at no cost. You can upgrade to premium versions for more advanced features, but for the everyday investor, the free versions often suffice. Now, let's not forget the role of social media in tracking market indices. Platforms like Twitter have become hotspots for financial discussions, with investors, analysts, and even CEOs sharing their insights. A well-crafted tweet can sometimes move markets, making Twitter a valuable tool for keeping your finger on the market's pulse. So there you have it. Financial websites for the numbers, news platforms for the story, trading apps for the real-time updates, and social media for the buzz. It's like a well-balanced financial diet, each tool offering a different nutrient essential for your investment health. And remember, while these tools make tracking market indices easier, they don't replace the need for thorough research and careful analysis. They are aids, not substitutes. So, use them wisely, and they can be powerful allies in your investment journey. With these tools at your disposal, staying updated on market performance is as easy as checking your social media feed. So, go ahead, embrace the digital age of finance and let these tools help you navigate the exciting world of market indices. Let's put this knowledge into practice, shall we? Picture this. You're an investor with a keen interest in the tech sector. You've got your eye on a few promising stocks, but you're not quite sure how they stack up against the broader market. Enter the NASDAQ Composite Index, your new best friend in the world of tech investments. The NASDAQ Composite Index is like the big kahuna of tech-heavy stocks. If the tech sector were a beach, the NASDAQ would be the lifeguard tower, keeping an eye on everything from the biggest waves to the smallest ripples. It's the benchmark that tells you how tech stocks are faring relative to other sectors. Let's say you notice the NASDAQ Composite Index is outperforming other indices. That's like seeing a rocket soar into the sky while others are still stuck on the launch pad. It's a pretty good sign that the tech sector is on fire, and investor confidence is soaring. It might be time to put on your astronaut helmet and prepare for liftoff. On the flip side, if the NASDAQ Composite Index is underperforming, it's like watching a tech-themed party deflate faster than a popped balloon. It might indicate that investors are losing confidence in the tech sector or that there are some economic headwinds on the horizon. It's time to buckle up and brace for some turbulence. But remember, the NASDAQ Composite Index isn't the be-all and end-all. It's just one of the many tools in your investor toolkit. It's like the compass guiding you through the vast universe of tech investments. It tells you the general direction, but it's up to you to navigate the journey. And just like any journey, there will be ups and downs. One day, the NASDAQ Composite Index might look like it's riding a roller coaster to the moon. The next, it might be taking a nosedive towards the Earth's core. But don't let the twists and turns ruffle your feathers. Keep your cool, stick to your strategy, and remember, every dip could be an opportunity to scoop up some bargains. Now, tracking the NASDAQ Composite Index might seem like a tall order, but fear not. With financial websites and trading apps at your disposal, you can keep tabs on it as easily as checking your social media feeds. So go ahead, add the NASDAQ Composite Index to your watch list. Turn on those notifications and let the updates roll in. And while you're at it, why not have a little fun? Throw in some funny emojis, make some humorous remarks, and lighten up the financial jargon. After all, who says finance has to be all numbers and no fun? So if you're a tech enthusiast, keep a close eye on the NASDAQ Composite Index. It's your guiding star in the vast universe of tech investments. We've covered a lot today, from the significance of market indices to tracking them and applying this knowledge practically. Let's take a moment to tie all these strands together, shall we? Market indices, in essence, are the pulse of the economy. They act as economic barometers, reflecting shifts in investor sentiment, economic indicators, and corporate earnings. These indices are not just a jumble of numbers, but a reflection of the overall market sentiment and the state of economic health. They rise and fall, painting a picture of the financial landscape, sometimes sunny and at other times stormy. Moreover, we explored how technology has made tracking these indices a breeze. Financial websites, news platforms, trading apps, these are your go-to tools to keep a finger on the pulse of the market. They provide real-time updates, interactive charts, and a wealth of information right at your fingertips. No longer do you need to be a Wall Street insider to understand the ebb and flow of the market. We also dove into the practical application of this knowledge, taking the tech sector as an example. The NASDAQ Composite Index, a benchmark for tech-heavy stocks, can be a key guide to understanding the performance of your tech investments relative to the broader market. When the NASDAQ outperforms other indices, it could indicate strong investor confidence in the tech sector. In conclusion, market indices are a crucial tool in your investment arsenal. They provide an insight into the broader market trends, help you gauge the performance of your investments, and guide your future investment decisions. That's all for today, folks. Remember, market indices are more than just numbers. They're the heartbeat of the economy. So, stay informed, invest wisely, and see you in the next video.